I showed y'all. The candlesticks yesterday. Showed y'all the different types. Well, it'll be 2 days later, I guess. I don't know. So green, of course, bottom, top. I'm sorry, I'm over here. So I showed y'all in the last video about the candlesticks. I showed y'all that the green is opens at the bottom, closes at the top, and the red closes at the bottom, opens at the top, right? Now I'm going to show y'all the volume and what the volume means, the RSI and the MACD, so you can make a better judgment of where you're going to buy in and buy out, right? Now, you don't judge a stock by just these alone. You're going to want to, depending on how far you want to go, if you want to do a swing trade, you kind of want to pick out the best range for your stock, right? A lot of people trade just off the RSI, so they'll buy right here and just let it ride until it's overbought. But most cases, let me do UCO is a good example of it going down. Let's see. Okay, you can tell that it's been going down, right? But it's overbought right here, sold right here, so they kind of made a little bit of profit, right? But as you can see right here, it was oversold, I'm sorry. It's oversold, overbought. Sorry. So you can tell it's oversold right here, right? But if we waited, we would barely get enough money, right? And let's say it dipped again and we bought right here. By the time we sold at oversold again, or overbought, overbought, we would have lost money, right? So we don't blindly go into stocks. So we're not just gonna buy blindly at the RSI over sold, because when it goes down to the what was it right here? When we go over here, when it's overbought, it's not gonna be the same price, and that really isn't a good way to trade. Now let's say, let's go to Disney. Where is Disney anyway? I doubt that's the Disney stock. Let's throw another one in there. There's other factors that go into this. So same thing right here. It's overbought over here. Oversold. I'm sorry. Oversold. And it gets overbought over here. But it's, if you could tell, when we bought right here, the price is, of course, higher than right here on the overbought part. So as a reminder, you never go in to the stock blindly. You kind of want to do your research, and you would want to try to have, I wouldn't say stop limits, but if you're uncomfortable making the decision on your own, I would choose a stop limit. Because let's say one day you bought on an oversold, oversold. And then 10 days later, you're like, how much is that? You're down $6, and it's still, you might want to get out of there like the day it drops $2. Because if you're going to wait 3 months for it to go back up and you'll make a $2 profit, that's really not worth waiting. You're going to want to jump out, wait, maybe buy in this day, sell off this day. Something like that, right? We're not trying to just gain $1 or $2. We're trying to make maximum profit. And $1 or $2 is fine, but you're really going to wait 3 months. that doesn't make sense. So oversold, overbought, oversold, overbought. So we don't go blindly, but that's something we look at, because let's go back to Nokia. And sorry for the sniffles. I don't know why I just got them when I started recording. So let's see. This would be a good way to get in, because you oversell right here, and then you basically ride that train all the way up to the overbought, and then you could sell off. Same thing, you could wait, and you could just wait till it hits oversold again, and then sell it overbought. But overbought, unless you have Webull, you're not going to be able to sell pre-market, so you'll probably have to wait right here, and you get a little bit of profit on you. That was like a $2 profit there for one day. That's good. So that's basically what you're going to be looking at with the RSI. It's going to show you that the oversold, and it's going to show you overbought. Now, if you want to know the real, well, the definition is it's basically called, the RSI is the relative strength index, a momentum oscillator that measures the speed and change of the price movements. So our default is 30 to 70, 30, 70, oversold on 30, overbought on 70. They usually have it, you have it to where it's 0 and 100, but typically the normal, what you're going to get on your Thinkorswim is going to be the 30 and 70. So I'll just leave it alone. It really doesn't bother me. Okay. That was a lot of talking. Now the MACD. Now the MACD is a moving average convergence, divergence. So it's a trend following momentum indicator that shows the relationship between the two moving areas of a security price. So the MACD is calculated by subtracting the 26th period momentum moving average, the EMA, from the 12th period EMA. So we're going to see. Let's look at some good MACDs. Yeah, that's good. So you basically don't want to buy when it starts to go up, because you could have, when you bought, you could have lost money, you would have freaked out, you would have sold, or it would have hit your, because that dropped $3, you would have probably sold out, and you're like, what the heck's going on? It's supposed to go up, right? You need other factors that go in with the MACD, with the RSI. Especially if you're day trading, you really don't want to use the RSI too much, because as you could see, it was overbought, oversold. It really worked there on that area. But in other aspects of the stock, you're really not getting the full potential, because it can easily go south and down without you knowing, and it's still going to be oversold, and it's going to keep going down, but it's going to be in this area, and it's really not going to work out for you. With this, you could see where you're like, oh, okay, it's going to go back up, and then it rides up a little bit, and then it goes down. Now, that's what got me in my early trading days. That's what got me today, actually, with my Nokia. I bought right here, and it ended up selling out. I had to sell. I wasn't reading the charts right. I thought it was going to go back up from what the charts were reading at that time. Now I'm going to show you that you're really going to want to go in. Let's do the minute if we're doing daily. So you're really going to want to go in right here. So you see the MACD is down, is going back up, But we're not just gonna buy right here because you never know, it's gonna go right back down, right? So we're gonna I'm gonna teach you confirmation. Confirmation is when you see that it's a trend, right? So you see this is above the SMA line. SMA line is the I'll cut this off. Sorry. The SMA line is a simple moving average. So it calculates the average of a selected range of prices, usually closing prices, by the number of periods in that range. The SMA is a technical indicator that is aimed in determining the asset price will continue or reverse in a bull or bear trend. Now you can see that this SMA line, and this is the EMA, this is the I said it earlier. This is the exponential moving average, EMA. SMA, EMA. So if we zoom out, you get, right here, you can see that it moved up, right? But if we look right here, it's not going to be the same thing. It's going to be going, okay, it's going to be like this. So it's totally different when we see it, right? It didn't look like it moved that much, but if we go back to the, is this the one? Break, I came back. I lost my spot, but I think I was talking about the SMA line and the EMA line, right? So it's always going to be different every chart you look at, and I know I'm kind of beating a dead horse, but since I'm back into editing and stuff, I got a new take on it, I guess. But let's look at the 10-day chart. And the EMA, as I said, is the whatever I already said. It goes up, and you can see it's a trending line, right? So you guess if we wanted to make a swing trade, we'll kind of look at this and monitor it and see where it was going. You can kind of see it's leveling out. It might head down. So we'll kind of, hopefully it spikes up and we could sell tomorrow, but if not, I'll sell it anyway. The EMA, you can see that's the shorter term move, and you can just see it going with the price, right? The next video, I'm gonna show y'all when to buy, when to sell. I'm gonna show y'all the confirmation validation. I want that in a separate video just to show y'all, to kind of go in depth, because it's already a little too long video right now. So I'm gonna go do that. I'm gonna show y'all how to use all these 3 charts, and yeah, that's about it. Oh, I did tell y'all I was gonna show y'all how to do this, how to do the volume. Now it just basically shows you, we're on the 30-minute chart, right? So it basically shows you how many people are buying and selling on these every 30 minutes, right? Right. You're right. Okay, so you can see once it goes into market hours, which is this light gray area, I'm sorry. You'll see that there's a lot less people trading. And that's because I think Webull, I believe, is the only spot where you can trade pre-market. I haven't even tried it out yet, but right when it hits, it's 8:30 my time, but it's supposed to be 9:30. Once it hits 9:30, that's when you see all the volume go up and people are more active, right? You can see that hardly any. It was pretty dead right here. So yeah, that's about it. Hope you liked the video. I do have a Patreon. If you can join it, I'll be going over all of my stocks, my daily stocks, my weekly stocks that I'm gonna be swing trading. I put a lot of effort into these charts. I do a lot of research for these stocks, and if you're looking for a stock, or you need help trying to find one or whatever, I'll be on my Patreon helping y'all out.
Um,